Thank you, Shane. Can you hear me? Is it working? All right. Good. Yeah, thanks, Shane, and good afternoon, Token2049. I am Simon Barnby. I am from Archax, and today I'm going to tell you a bit about how we see financial markets getting disrupted based on the digitalization of financial markets and the benefits of some of the things that have been pioneered in the crypto space with blockchain, cryptocurrencies like Bitcoin, but in particular tokenization and the concept of creating tokens to represent things. I'm going to cover sort of 5 main areas today. A little bit about tokenization, just to give some context, which probably most of you may know already. How we think that tokenization is going to really disrupt the post-trade space. The democratization of markets. Now, I know that's the kind of a term that gets bandied about a lot, and maybe is something that is overused, but we do believe in sort of opening up more investment opportunities to more people can be achieved through tokenization. And then, having looked at challenges, I'll talk a bit about DeFi. But I want to kick off first with the case for tokenization. Now, if you look at all market segments, there have been a lot of changes brought about by technology. You only have to look at some of the things here: music and video, Netflix and Spotify. I mean, in the old days, we used to buy vinyl, then we bought CDs, then we downloaded music, and now we stream it without even thinking about it. And, you know, the music hasn't really changed, but the way we consume it has been completely transformed. The same thing has happened with for companies like Uber and Airbnb for travel and accommodation. Amazon has totally changed the way the retail marketplace works, and things like Zoom and DocuSign have come to the fore during the pandemic as a new way of sort of running business. But financial markets, they haven't really had that same transformation yet. They've been electronic for a long time. I mean, front office trading has been electronic for a long, long time. But what happens post-trade is pretty manual. There's a lot of parties involved. It's very, very inefficient. So there is a huge opportunity for that to be transformed. A little bit more context. I mean, I'm talking at a token conference, so you're all familiar with tokens, but, you know, traditional securities, the way stocks and shares are currently traded, they're very local. They tend to be very regional. So you get a London Stock Exchange trading, you know, mostly London stocks. They tend to operate just sort of during normal business hours in the jurisdiction of where the exchange is based. And although they're very effective in that way, and along came crypto, Bitcoin in particular, and sort of brought about some new ways of doing things. 24/7 trading, global marketplace with a global audience investing, really fast and efficient. But they're kind of unregulated generally, and so I guess the real exciting thing from our perspective is these the digital securities, which are a marriage of the two. So taking the sort of the regulated benefits of traditional securities and factoring in some of the huge benefits that have been pioneered by Bitcoin with cryptocurrencies and creating this sort of regulated digital securities. And this concept of tokenization, it's a much more efficient way of representing ownership of an asset. So this sort of fractional ownership with tokens recorded on a blockchain. Easier way to raise capital, you know, reach a global audience if you're trying to raise capital in a digital way. Access new asset classes. You know, we're talking to people tokenizing everything from funds, equity, debt, and real estate, all the way through to portfolios of racehorses, classic cars, diamonds, art. I mean, there's obviously the NFT space too, but in terms of fractional ownership of large investment portfolios of things like cars, you know, it's an interesting way to open up access to a brand new audience. The democratization piece is sort of covered by that too, and then efficiency gains are a real benefit too, which I'm going to talk about in a little bit more detail. Where we're seeing the action at the minute, kind of this slide kind of shows a liquidity spectrum, but also it's a time axis as well. And at the minute, it's mostly at that sort of illiquid private securities, things like, you know, interesting investment opportunities. That's kind of where the action is in the tokenization space right now. And that's because they have the most to gain. Liquidity, you know, getting liquidity for these asset classes is important, raising capital for them is important, and the efficiency is obviously important for all. If you look at the semi-liquid area, things like hedge funds, maybe sort of listed small, medium enterprise companies, there the benefits are more around efficiency and capital raising rather than liquidity. And at the far end, you know, you're trading Vodafone or Apple or whatever, then liquidity is not an issue because they're super liquid. They don't need access to capital, but a more efficient way of handling them is really beneficial. So what about post-trade? Well, if you kind of, blockchain has a huge potential to transform post-trade operations. I mean, in 2020, over $3 quadrillion worth of transactions were processed post-trade by Euroclear in Europe and the DTC in the US alone. So it's a huge marketplace. There's a huge amount going on there, but it's very, very inefficient. And the benefits of blockchain can really strip out intermediaries. It can remove friction. It can reduce costs, and so it's a very exciting way for transforming traditional financial markets. And there are also, regulatory things underway as well. For example, the markets in markets in crypto assets regime in Europe is paving the way for how tokenization and digital representation of stocks and shares can be used in a regulated way. And there's other actions too, like SocGen have recently published a paper all about how to use crypto assets to represent securities and form security tokens. And the DTCC, the big clearer in the US, has a Project Ion, which is looking at blockchain too. But if you kind of look at the traditional markets of today and how they actually trade, you get someone who buys shares through a broker typically, and those shares are then transacted on the exchange, typically a stock exchange. But then once that trade takes place, there's a whole host of other parties who get involved, from clearers and settlement firms, administrators, CSDs, so it's quite a complex landscape. Although it looks fairly orderly there, actually what happens is everyone's got their own books of records, they've all got their own record of what they think the trade that took place was, and in effect there's often discrepancies, reconciliations have to take place, so it's a bit of a mess and it's a bit of a nightmare. It takes time and it's inefficient. Along came crypto, where everything happens on the exchange, it clears and settles straight away, a much simpler model. But that simpler model, you can get away with that simple model because regulation hasn't kicked in. If you kind of look at a digital securities exchange trade, and Archax is an exchange like that, then this is kind of, those parties have to come back in because regulation dictates that they need to be there. These parties need to be there. However, the advent of blockchain means if all those parties run a node, then when a trade takes place, then everyone gets that access to that same information straight away. They don't need their own books of records. You don't have discrepancies to sort out, and so actually you can trade and settle instantaneously as you can in the crypto world. And this will be a huge transformation for capital markets. Things like corporate actions, for example, too. If you have shares and you've got voting in a company, at the minute people vote via an intermediary, their prime broker or custodian, before that vote gets back to the company in question. So the company doesn't necessarily know who's voted, whether they voted or not, because there's that intermediary in the middle. Whereas with a digital security, with a token, then that voting can be direct. So you know who holds the token, they're in their wallets, you can vote directly and you cut out that intermediary. And it's the same thing with paying dividends as well. The minute you have to pay it out through those intermediaries, you're going into the fiat banking system, which is a bit of a pain, whereas in a blockchain world, and particularly with a stable coin of some description, the issuer can send payments out instantaneously to all their token holders, their shareholders. So it's a much more efficient way in that space. Similarly, if you look at funds, at the minute, if someone invests in a fund, say it's a real estate fund, if that investor wants to realize maybe $5 million worth of that investment, if the fund doesn't have ready cash, it needs to sell some of the assets to generate the cash to pay the investor. That means they've got to rebalance the portfolio. It means the portfolio manager is distracted, and it's not an ideal sort of world. Bring along a tokenized fund where tokens represent ownership in the fund and there's a market where those tokens can be traded, then that investor can simply trade in and out of the investment fund on the marketplace. There's no effect on the fund manager. There's no effect to the portfolio of assets either. So again, a much more efficient way of operating in the financial markets world. In terms of democratization, the financial markets, so traditional financial markets are huge. That all adds up to around $1.4 quadrillion in traditional financial markets currently. And it's interesting that crypto is in there, which is around the sort of $2 trillion mark at the moment. The whole crypto market cap is less than Apple. There's a huge potential there. And if you kind of add in all the other things I talked about, racehorses, classic cars, diamonds, art, then the market is even bigger. And actually, tokenization is already taking place. All those things in yellow, there are examples of people tokenizing those asset class, creating representations on a blockchain, and leveraging some of these efficiencies that I've been talking about. In terms of making those markets easier to access, though, if you kind of look at the way markets currently operate, typically if you want to invest in a private company, you've got to go to that company directly and invest in their shares, like a VC firm might do. If you want to invest in a semi-liquid thing like a hedge fund maybe, then again, you're going through the whole subscription cycle. It's not particularly open. It's not very easily accessible to most people. At the liquid end, it's not so bad. You have a broker and you can trade the NYSE or the NASDAQ or the London Stock Exchange. But typically, if you're trading internationally, you've got multiple tiers of brokers there to actually reach the market, so multiple sets of fees. So again, not particularly efficient, not particularly democratic. And I think the beauty of kind of a tokenized world, leveraging some of the benefits that have been pioneered by Bitcoin, a 24/7 market with global accessibility, you can go directly to the market yourself. Or maybe via a broker. I mean, the broker can still has a place to pay, and some people prefer to trade through a broker, but only you can do it through one broker, or you can do it directly. So it's a much more democratic marketplace. And I'm not saying that brokers will get completely disintermediated. They quite like the advent of tokenization too, because they get access to new things. They can help firms raise money. They can invest in firms at an earlier stage more easily through a digital raise. They can offer new asset classes out to their clients. They're always looking for ways to remain competitive and offer services that differentiate them from others. So there's a lot of sort of benefits to the whole community. So it's not necessarily just about democratizing markets to the individual, it's about opening it up generally, and sometimes brokers will be involved. In terms of challenges, though, I mean, this will take some time to occur. I mean, at the minute, it's a nascent marketplace. Liquidity is a challenge. It takes time to build liquidity. You can't just turn it on. Market makers need to get involved to help provide liquidity. So that's one challenge the marketplace faces. Regulations are continually evolving. One has to sort of keep abreast of all the different regulations from the different regulators around the world. Interoperability is interesting because at the moment there are multiple blockchains and people are using different protocols, different technologies to create tokens. So there's an interoperability question, and standards will need to be agreed and chains will need to work together. And finally, the whole ecosystem needs to develop and evolve to support all this trading. And the traditional financial markets need to evolve as well to embrace these new technologies too. It's interesting if you look at the regulation side. I mean, here in the UK, the FCA has actually been fairly forward-thinking, and they have broken up crypto assets into these three main categories: security tokens, regulated instruments, regulated tokens, e-money tokens for things like stable coins, and then unregulated tokens, which are things like utility tokens, ICOs, and cryptocurrencies. So they've got a fairly clear definition, which is really good and makes it relatively simple to operate. However, there are more. When I sort of Googled regulators around the world, I found more than 320 of them. So if you're going to create a global marketplace, you have to navigate a complex regulatory landscape, and every regulator has a slightly different view of things, slightly different rules. So there's complexity to be navigated for sure. Finally, DeFi, and I'm not going to spend too long on this because there's lots of companies here focused on DeFi, and it's a sort of a topic in its own right. And it's interesting, it's huge, and I think what's happening in DeFi is really, really exciting. It is clearly the new frontier. It's clearly the way markets are going. But the trouble is, and there are great returns to be made too. Just turning your US dollars into USDT or USDC and staking them somewhere, you can earn a pretty decent return compared to sticking them in a traditional bank. But I think the big question here is regulation, because arguably staking, lending, and things like that should be regulated in the eyes of many regulators, and at the minute the market is operating in an unregulated way. So it's going to be interesting to see what happens. The SEC in the US has already announced that it's looking at regulating DeFi, and it's kind of looking at that whole marketplace in more detail. So some questions to be answered there. I couldn't finish without a bit of a plug for Archax. We're the first FCA-regulated crypto exchange and digital asset exchange here, operating out of London, but global. We can help firms raise money in our primary market. We provide a secondary market for the trading of tokens, whether they're crypto, unregulated tokens, or regulated digital securities. We offer an FCA-regulated custody service for digital as well as fiat cash. And we're looking at the stablecoin area and staking and lending through a regulatory lens, because we think that's a really exciting place to be. That was it for me. I'll try to do it in 15 minutes. I think I've just about done it. Thank you very much for your time. Good afternoon.
Awesome presentation by my good friend and main man, Simon. Don't go anywhere. We're not letting you go just yet, my friend. So how have things been in building the Archax story? How have you found being in London? And more importantly, maybe you'll give us some insight about dealing with the regulator and how you got regulated. What was that process like?
Yeah, I mean, we found the FCA as a regulator very open, which was great. They were interested in embracing these new technologies. They're very cautious and they're very tough. They're one of the toughest regulators in the world, but they were open to I think they want London to remain a fintech centre. They want London to remain a key capital market centre too. So they want to look at these things. However, it was a long process. You know, it took us 2 years from start to finish to get regulated. I didn't have any grey hair when we started, and it's cost quite a bit of money too. So you know, but it is a key differentiator. I mean, the regulation we have is actually unique at the minute. So we have a unique regulatory stack, and I think it's a great position of strength to then go and target the rest of the world. You know, with an FCA-regulated sort of umbrella.
Yeah, I think you're pioneering that structure for hopefully many that will come behind you, but maybe not compete with you. Maybe I'll open the floor up to any questions if anybody has any questions for Archax. They're very much plugged in on the institutional side. What about your capital raising? Where are you guys currently at with that? And you know, where are you looking at the future?
Yeah, I mean, we've kind of raised our own money to date. But mostly seed funding, which we raised before we were regulated. So we've raised enough money to get us to launch and move into sort of production and a live environment. We're looking at doing a sort of a equivalent of like a Series A right now. So we're working with some investment banks to look at our next phase of fundraising, which is kicking in sort of now.
Excellent. Well, please keep us all up to date on that. And where can we find all the information about Simon and at Archax? Thank you very much, Simon. Awesome.
Cheers.
Round of applause for Simon. Thank you very much.
Thank you.